Hey guys, Maryanne Elliott from 360 Mortgage Solutions. So today I wanted to jump on and talk about loan terms, and more specifically what you need to know when it comes to selecting a loan term. So a lot of people don't realise, they just assume that your home loan has a loan term of 30 years. Now this is the most common loan term, but that doesn't mean it has to be your loan term. You can select whatever loan term you like. So for example, if I'm doing a refinance for an existing client trying to save them as much money as possible, I wouldn't select a new 30-year loan term, especially if they're, say, 5 years into their current term. It means that I'm taking what is left, 25 years, and pushing it back out another 5 years for 30 years. So that's another 5 years that client will be charged interest, which kind of negates the extra savings that I'm making when I'm getting them that lower discount. Now there are some times when we might push that loan term out, and there might be some tax reasons, or your accountant or financial advisor may advise that that's a good solution for you. But in most cases, if your goal is to save money, we really want to look at that loan term. So when you first take out your loan, if you can afford it, you can select a lower loan term. So you can choose to have your loan paid off in 25 years or 20 years. The key is making sure that you can afford it according to the banks as well as you can afford it with your current lifestyle, looking at what the repayments look like. But the beautiful thing about that is it means you don't have to wait 30 years until you finally own your home. You can make small little adjustments to how much you pay to make sure that it gets paid off within the 20 years or the 25 years that you've chosen. There are also some lenders who will let us select a longer term than 30 years. So sometimes with some lenders it's 35 years, and with other lenders it's up to 40 years. So if this ends up costing you an extra 10 years, let's say, in interest, why would you do it? Well, the easy answer is a lot of clients might choose that longer term when servicing is tight. So what I mean by that is the bank will look at what is the repayments over that 40 years, and because it's pushed out an extra 10 years, it's a slightly lower repayment than what it would be over 30 years. So if your servicing is tight or your income is quite tight and there's not quite enough, you may consider going that longer term. And then later down the track, when your income has grown and your mortgage has dropped, you might look at changing that loan term again so that you can really maximize your savings. I also rarely, but sometimes, have clients who choose a 30-year loan term for their first home, let's say, and their plan is to have it paid off within 25 years. So what they'll do is they'll calculate what those repayments need to be to make sure that that loan's paid out within 25 years. What this does is it shaves 5 years off their loan and saves them thousands of dollars in interest, but it also gives them a little bit of a buffer. So touch wood, if anything was to happen and they've made those extra repayments for a couple of years, they'll have a nice little sum sitting in their redraw account. So that, like I said, if anything happens, they've got some cash that they can rely on. It's almost like a forced savings, but while it's accumulating in your home loan, you're not paying interest on that portion. The other beautiful thing about accumulating it in your home loan is seeing the home loan balance drop down. And I know I've spoken to some clients who, once they see that home loan balance drop down to a certain amount, they don't want to take the money out of that redraw because they'll see the balance go back up, and it's a mental game. So that's the pros and cons with the loan term. It's really important to mention that it is very unique to each client. So you need to make sure you're having that discussion with your broker and financial planner and accountant about what are your long-term goals, what is your plan for that property, what is your plan for future finance, and what's your plan for when you want to retire and how you want to make sure you're debt-free at retirement. Those sorts of conversations all go into what loan term I would recommend for my clients. So otherwise, that's it from me. If you have any questions about loan terms or there's anything else that you want to ask, I'll pop a link below and you can book a free online appointment. Otherwise, have a fantastic day.